So now we're going to talk through the COSO Framework. This is the illustration of the current COSO Framework, and then it talks through, in the next few slides, there's 5 components and 17 principles. And the basic idea behind this is if you have your 5 components and you have your 17 principles, and you have things to cover, all these 5 components and 17 principles as a company, then you will have a pretty good system of internal control in place. It illustrates it this way with the 3 objectives up top here, and the structure of the organization over here, and then the 5 components down here. So the 5 components are control environment, the risk assessment process, the actual control activities, info and communication and monitoring activities. Here's a helpful way to remember it is if you kind of shuffle them and reorganize them, you can get them to spell out crime, which is what we're trying to prevent with a good internal control system. Ha 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 ha. Oh, one thing to point out here though is remember the E in crime is control environment. A lot of people, I see them, sometimes they'll get confused on a test because they'll write out crime and then they'll be filling it in and they'll fill in the C with control environment and they'll get to E and they'll be like, what is E? I can't remember. So just keep in mind the E is environment. So as we said, the COSO framework has these 5 components with 17 underlying principles, and we're going to go through them hopefully relatively quickly and painlessly. So the control environment, I think we've talked about this concept before, but it is sort of the umbrella over the organization in a sense, and it consists of all these high-level, entity-level controls. So things like having a high-quality board that does effective oversight, a good independent audit committee, good tone at the top, all these types of things are part of our control environment. And if we look at the underlying principles, you'll see things here like the first principle is talking about commitment to integrity and ethical values. I mean, that's clearly tone at the top. And then the second one is talking about having an independent board, and this is talking about board oversight. I'll talk a little bit about principle 4. So principle 4 is talking about the organization has a commitment to attract, develop, and retain competent individuals. Okay, so this kind of covers things like having good HR practices, making sure you do background checks on your employees before you hire them, making sure you compensate employees appropriately so they don't feel, overworked and underappreciated. All the things like that kind of fit into this 4th principle. So we don't want disgruntled employees. We don't want incompetent employees. We want to be promoting the right people. All that good stuff is fitting into principle 4. And principle 5 is just saying, hey, we hold people accountable for their internal control responsibilities. So a lot of the time when you are reading through the language of an internal control, it'll say something along the lines of the AP clerk performs AP reconciliation. And basically, the reason why I'm pointing that out in conjunction with principle 5 is if we find out, right, the AP reconciliation is not being performed, then we should go to the AP clerk, right? It's because the language of the control indicates that this is the responsibility of the AP clerk, so ultimately it should fall to them. So if we've put something down as being part of this person's duties, we should hold them accountable and they should kind of get written up when they're the one failing to do it. In terms of what I would expect you to know on tests and things like this, we're obviously going through 17 principles. I'm not going to ask you some question that's like, what is Principle 16, what you could expect to see would be a question similar to this CPA question, which is saying, hey, which of these are a component of the control environment? So you have detection risk on the one hand, and then you have HR policies and practices. Okay, no to detection risk, right? And yes to the HR policies and practices, because we know this is part of Principle 4 that we just looked at over here on the last page, right? So definitely essentially know the content of each of the COSO components. So the next COSO component is risk assessment. And to be very clear, this is management's risk assessment. This is very different from the way we've been talking about risk assessment in Chapter 4. So Chapter 4 was the auditor's risk assessment. Two totally different things. However, they have a lot in common. So management's risk assessment is basically the process management goes through to try to identify business risks, essentially, that may prevent the company from achieving its goals or objectives. In terms of the principles making it up, you see actually the first principle is they're supposed to specify their objectives, because if the whole point of this risk assessment exercise is to identify risks that could stop them from meeting their objectives, then we need to know what the objectives are first. That's why Principle 6 is, hey, specify your objectives. Principle 7 is, okay, now identify the risks that will prevent you from achieving your objectives. And then Principle 8 is about fraud risk, right? So again, similar to the auditor, they have to think through fraud risks, where those lie. And Principle 9 is about thinking through changes that have happened during the year, significant changes that would impact the internal control system significantly. So it could be, hey, we implemented a new system during the year. It could be, hey, we acquired another company during the year and they're on a separate GL system, so we need to worry about that. Next COSO component is control activities. These are all this sort of in contrast to the control environment, which is the high level, entity level stuff. The control activities are more about all the low-level individual control activities. Principle 10 of the control activities is essentially that you identify all these individual control activities that will mitigate risks. So I wanted to kind of talk through each one. So this first one, performance reviews. In terms of performance reviews, when that word is used, it's talking about performance reviews for the firm, not for people, right? Because back here in Principle 4, that would include like annual performance evaluations for people. This performance reviews is talking about, okay, monthly and quarterly, we need to compare how the firm is doing compared to budget, right? Actual versus budget or forecast. And, based on those decisions as to how the firm is performing this year, then we can make alterations and adjustments to help the company moving forward. So that's the type of performance review we're talking about here. The next item here is physical controls. That's what this refers to. So physical controls are actual physical things. So I had a security guard as an example, or a physical lock. So things like having warehouses that are locked down, or cash lock boxes, or in the casinos, they apparently have like cages that the cash is in. So those are physical controls. Segregation of duties is the next one, and I know you guys have talked about that a whole lot in AIS, I believe. The way we talk about segregation of duties in audit is a little bit different. So I'm going to skip ahead for a second and then I'll come back. So we talk about segregation of duties and audit as typically wanting these functions to be separate. So one is custody, authorization, and recording. And also easy to remember because it spells out car. So you'll get questions, and most of the time with these segregation of duties, right, you get questions very similar to this, where it asks you, hey, which of these can two people not do? And basically the way around these questions is to figure out which of these activities, how do they fall into these categories, right? Are the things referred to in these questions custody, are they authorization, or are they recording? So I'll let you pause and read this question. Question is saying proper segregation of duties wouldn't let you do both. So I'm looking for an answer that is going to have two separate functions listed in it, or two incompatible functions.
Okay, the answer is D.
So one is a recording activity, and make cash disbursement is a custody, because it doesn't say, I suppose you might interpret that as authorization, but it doesn't say authorize cash disbursements. It says make cash disbursements, which implies you have the custody. So C, establish internal controls and authorize transactions. Both of these can be authorization. Record and record here. And journalize entries and prepare financial statements. Both of these, again, are record. Oh, one thing I want to point out in terms of these types of questions is a lot of times you'll see, even in current CPA questions, you'll see one of these activities talks about the mail room, right? It'll say so-and-so has mailroom access. And that mailroom is a code word for custody. So just know mailroom equals custody. And the reason for that is it's assumed if you're working in the mailroom, you have access to mail, which can include envelopes that have customer payments in them, right? Ingoing and outgoing mail can include cash and checks. So going back up here, the next one or item is information processing controls. Okay. And to explain this, I want to look also ahead to Principle 11, because Principle 11 talks about general activities over technology. So I want to talk about the difference between these two things: information processing controls versus general IT controls. So the information processing controls are the individual kind of account level IT processing controls. So an example there would be the three-way match type of control that we talked about before. So anytime there's a sale, a three-way match should take place, which is a comparison of the customer's sales order, the shipping doc, and our invoice. And we'll compare things like the quantities, the items, maybe even the price. And the idea is this is the type of control that a GL system should automatically be doing anytime there's a sale, right? I want to make sure if I'm invoicing a customer that the items I'm invoicing them for actually match up to items that I have shipped to them and items that they ordered. I would not want to be trying to bill them for something that I didn't send them that they did not want. So this three-way match should be taking place, and this is a really basic type of systems control that should happen even in the most oldest school type of GL systems. And so unless the company's completely on paper, they should have some kind of system control doing that. All right, so compare that to the general IT control, which is what Principle 11 is. So a general IT control would be something like, hey, all of our systems are password protected, right? So that is a a general control that is kind of covering all sorts of systems. And principle 12 is just saying, hey, once we have decided all the controls we need to help mitigate these risks, we're going to deploy those controls throughout the organization. Our next COSO component is information and communication. Looking at the principles, it's basically saying, okay, every day to support the functioning of internal control, we're gathering information as a company. And interestingly, if you read through these, you'll notice a pattern, which is the language in this list of items very closely mirrors the language of the assertions. Right, it's the identify and record all valid transactions. That sounds kind of like it's covering existence and completeness. This is talking about classification, measure the values, kind of talking about valuation, recording things in the proper period is cutoff, and presentation and disclosure. We're gathering information related to all these assertions to make sure it's correct. And you kind of want to think of this almost as a feedback loop, right? We are collecting this information out of all the systems, and then as we see errors, we're communicating that information basically to the powers that be internally to get them to fix and adjust any controls necessary to support the functioning of internal control, make those alterations to fix internal control so that we can have superior information flow. And principle 14 is just about communicating that information internally, and while principle 15 is about communicating that information externally. And monitoring activities is about having ongoing evaluations or separate evaluations of the company's internal control system. First of all, this whole ongoing or separate evaluations, an ongoing evaluation would be kind of if you're constantly testing internal controls to see what's going on. A separate evaluation would be, okay, if I set aside 1 month of the year for control testing. And you could actually say probably internal audit is generally performing ongoing evaluations of internal controls, whereas the external auditor is performing more so separate evaluations, right? Because they're coming in once a year to do those evaluations to say, hey, do I think internal controls are functioning properly? And then once they've performed those evaluations, again, if they find controls aren't effective and there are deficiencies, they're going to communicate those to parties that can take corrective action, okay, fix controls.